Hey, I want to bring in SureVest CEO Rob Luna. Rob, speaking of buying a dip, you've been buying the dip. The market keeps dipping. What are people saying to you when that happens?
They're saying I'm pretty stupid, Charles. I mean, look, at the end of the day, this is, what you're going to do in a bear market. You're never going to pick a bottom. We're looking at the S&P right now at 3692. We really think 3350 is a real possibility. But look, that's 10 to 12%. I'm not good enough to get out right now, get right back in the next 10 to 12%. So what I'm doing instead is I'm looking at companies that I'm investing in for 2 to 3 years that I'm getting at the biggest discount I've had in the last 5 years. And I'm not really worried about it, to be honest with you, Charles.
Right. It's interesting because when you say you're not good enough to do that, 99.9% of us are not good enough to do that. And that brings me to something I saw this morning, right? We're talking about investors, people who were traditionally taught to buy and hold, but they keep seeing what Wall Street's doing. So, and I'm not trying to pick on this firm, Truist, but they had they lowered their rating on ROBLOX today to a hold from a buy. Target, I think, is 29 now. Now, back in May, they reiterated their buy. They did lower the target to 36. But 1 year ago, last June, they had the highest target on Wall Street of 103, and they had raised it just then from 83. I mean, we all get things wrong, but when you say it's a buy at 94 bucks and a sell at 24 bucks, it seems ass backwards to me, and it sends out signals to the average person out there that, I can see why someone would be confused about buying and holding.
Yeah, ass backwards is a good technical definition for that. It doesn't make a lot of sense, Charles. Look, ROBLOX is one of these companies like we had in the late 90s. They're the future of Metaverse 3.0. Right now, that's getting crushed. We don't know exactly who are going to be the winners. This is one of those stocks I believe will be a winner, but there's going to be a lot of volatility. So telling someone to buy that 70% higher, sell it today, well, the market's telling you they're probably wrong because it's trading up 10%. And that's actually usually a good sign. When you see these analysts come out so bearish at the bottom and the stock rallying, that could be a good opportunity for a stock.
That's one of my favorite things I tell people all the time. If there's a stock and everyone's got a sell rating on it, guess what the next rating's going to be? If you get in before the rest, they're all going to be buy. Buy. You're going to wake up every day. One of these Wall Street firms is going to jump on your coattail. So I love it when everyone's got to sell. Hey, I got a few minutes, a few seconds to go. But what are you buying anything new since the last time we spoke?
Yeah, I mean, well, look, the safer names to buy right now that I think you have to take positions in: Palo Alto Networks, CrowdStrike, Google, Salesforce. Why those four? I'm comfortable telling people now because they're still going to be growing earnings over 20%, Charles, through this recession. If you buy stocks growing earnings during a bear market, that is a long-term winning strategy. I've been doing this for 24 years. It's always worked. I'm comfortable with those names right now.
And those names, they sell software that's either cybersecurity or names that actually help businesses survive during a recession. In other words, demand. Right. Rob, thank you so much, my friend. Have a great Father's Day.